Hello, I'm Andreas Bange and I welcome you to the Accounting Cycle Part 2. Today we will have a closer look at reporting transactions from operating into the ledger and into the journal. You remember revenue and expenses are within the income statement or profit and loss statement. Also losses and gains. They all have an impact on the net profit on the bottom. What are we doing with this profit or even with a loss? Well, we will transfer it into the retained earnings into the balance sheet. For a profit, we will add it to the retained earnings from the previous period. A loss will be subtracted. And as you see, we have a balance sheet again, and the retained earnings are on the right side of that balance sheet. And here we have the same rules with the BANGEicon, the BANGEicon. It is on the right side of the balance sheet, meaning that gains and revenues will be on the credit side and losses and expenses will be on the debit side. Let's have a closer look. We are selling, so first we have to analyze what accounts are involved. Here in this case we have accounts receivable and revenue. We are selling, so accounts receivable are increasing and our revenues are also increasing. The accounts receivable is an asset, it is increasing, so we will debit it. And the revenue is also increasing, and so we will credit it. And then we transfer it into the ledger, copy and paste. When we have an expense, for example, paying the rent, we have the two accounts here for the rent expense and for the bank account, meaning that our expense is on the right side in the balance sheet. It is decreasing, so we will have to debit it, and our bank account is an asset which then will go onto the credit side. And then we copy and paste it into the journal. That's it already for today. I hope it was helpful. Please like it, share it, subscribe it, and see you then next time. Until then, bye bye und auf Wiedersehen.